Hey guys, let me ask you a question. How do you know if you've outgrown your financial advisor? It's a fair question and one I'd like to address today. I hear it more often than you might think because here's the truth of the matter. It happens more often than people realize. And most of the time, the client already knows it. Deep down inside, they just haven't said it out loud yet. I want to give you an honest framework for answering that specific question. And I want to give you two specific things to ask any financial advisor. Whether you're evaluating your current one or you're considering someone new. First, I want to be fair. I want to be objective in all of this because there are a lot of good financial advisors out there. And the issue may not be that your current advisor is incompetent. The issue is that you simply may have outgrown them. Think about it this way. When you first started working with your advisor, your financial life was inevitably much simpler. One, maybe two accounts, an IRA, a mortgage, straightforward stuff. But your business has grown, your wealth has grown, your life is a little more complex. And with that complexity, advice needs to level up with it. A client recently came and he told me, hey, Garrett, the advisor who helped me at the local credit union, very nice person, but he's just not equipped to help me at this stage of my business life. Let me share some red flags. The biggest red flag is when the advisor starts talking more than they listen. They're dismissing your concerns. Worse yet, they're trying to steer you to products to sell. That's a commission-based agenda at work, clearly, and it's a glaring warning sign. We believe the best financial decisions begin with a conversation, not a product recommendation. That's the difference. We don't lead with product, we're going to lead with advice always. Before we talk about investments with our client, we want to make sure you understand what it is that you're looking for, what matters to you. We need to ask the questions. That is the key. Only then do we begin building a plan. We need to listen to what you're looking for. And advice doesn't stop at the portfolio level. Many investors think financial planning and portfolio management are the same thing. They aren't. Managing investments is very important, but it's only one piece of the puzzle. Imagine your advisor, a recent college graduate. He's your advisor because at the firm, he's been assigned to your account. They're capable, they're credentialed, but they've never run a business. They've never signed the front of a paycheck. They have no lived experience with what it means to own a company and no specialization in the unique planning challenges that come with business ownership. And that's not a knock on their character. It's simply a mismatch because a business owner's financial life looks nothing like a W-2 employee's. You may have equity compensation, stock options, even ESOP, business-owned real estate, multiple income streams. A future business sale may be on the horizon. And in many cases, a question about what happens to the business when you walk away. And here's something I'm seeing more and more these days. Business owners whose children have no interest in taking over this business. A parent who built a successful local company, generating real income, real wealth, and the next generation simply wants a different life, and you can't blame them. That's not a failure, but it does require a different succession and exit strategy than the one many advisors default to. These are not cookie cutter situations. They're highly personal. Preparing a tax return looks backward. For us, tax planning is a forward exercise. We work alongside our clients' CPAs. We coordinate with them investment decisions with their tax situation. before the year end, not after. And depending on the circumstances, that could mean tax loss harvesting, withdrawal sequencing, asset location, possibly charitable giving strategies, or Roth conversion planning. It's another example how real planning goes beyond selecting investments. And for a business owner, the tax planning conversation alone often justifies the entire advisory relationship. Think about your own life for a moment. When you bought your first home, started your business, sold a company, maybe inherited assets, or began seriously preparing for retirement, two practical questions to ask, whether you're evaluating your current advisor or sitting across from a new one. Question one, ask, hey, are you a fiduciary? And if they say, yes, I am, ask them to put it in writing. A fiduciary is someone who is legally and ethically required to act in your best interest at all times, not theirs. That means no commissions, no third-party compensation for steering you toward what? Products. If they hesitate or hedge or give you a non-answer, that tells you everything you need to know. Second question, ask them, how do you get paid? If they're fee only, meaning their only compensation comes directly from you with no commissions or product incentives, ask them to show you. Ask them to see their Form ADV. That's the document every single one of us registered investment advisors files with the SEC or the state. It discloses our fee structure, assets under management, any disciplinary history, and more.